For 40 years, the biggest financial fraud in history ran from a single floor of a Manhattan office building, $65 billion, 37,000 victims. And the man running it was the most trusted investor in New York, served on government boards, donated to charities, taught financial ethics. Nobody asked where the money actually went. Let's rewind to how the world's most respected fraudster fooled everyone for 4 decades. Queens, New York, 1938. Bernie Madoff grows up in a modest Jewish family. His father runs a small stockbroking firm that goes under. His grandfather is a day trader. Finance is in the air, but not the money. Not yet. After college at Hofstra, Bernie starts his own firm in 1960 with $5,000 he earned as a lifeguard and a lawnmower. Bernard L. Madoff Investment Securities. Not a prestigious Wall Street address. Not a prestigious anything. Just a small firm with a big ambition. But Madoff is smart. Not fraud smart. Genuinely smart. He becomes a pioneer in electronic trading. Before computers moved stock prices, he helps build the systems that do. He is one of the founding forces behind NASDAQ, the technology that runs the modern stock market. He becomes chairman of NASDAQ 3 times in the 1990s. He testifies before the SEC. He serves on advisory committees. He knows everyone. By the 1980s, Madoff is not just respected on Wall Street. He is revered, exclusive. His clients do not find him. He finds them. Jewish country clubs in Palm Beach and Manhattan. Hedge fund managers who considered it an honor to place their money with Bernie. You were lucky to get in. His office building was the Lipstick Building on 3rd Avenue. The legitimate trading business ran on the 18th and 19th floors. Clean operations, real trades, real records. The 17th floor was something else entirely. The pitch was elegant. Madoff claimed he was running what he called a split-strike conversion strategy. Buy stocks in the S&P 100, sell call options, buy put options. A sophisticated hedging technique that, he said, generated steady returns of 10% to 12% every year. Rain or shine, crash or boom. And here is what made it seductive. It was boring. No boasts. No promises of getting rich overnight. Just consistent, quiet, reliable growth. Year after year. Even during the 2000 dot-com crash. Even during 9/11. Even during the 2008 financial crisis. The returns never wavered. That should have been the first red flag. Markets go up and down. Everything goes up and down. Nothing generates positive returns every single year without exception. Nothing. But clients did not want to ask. The returns were too comfortable. The statements too clean. The man too respectable. On the 17th floor, Frank Di Pasquale, Madoff's lieutenant since 1975, ran the back office of the fraud. The office generated fake trade confirmations and fabricated monthly statements. They used an old IBM computer system to manufacture records. They selected real stock prices from historical data and printed them as if trades had occurred. They did not. No actual investments were ever made. Client money arrived. Some was paid out to older investors who wanted withdrawals. The rest sat in a Chase Manhattan bank account. Not in stocks, not in bonds, not in anything. Just pooled. A Ponzi scheme disguised as an investment advisory service. The feeder funds made it easier. Fairfield Greenwich Group sent $7.5 billion. Tremont Group sent billions more. They collected fees for connecting clients to Madoff and never questioned the returns. Why question a golden goose? In 2000, a quantitative analyst named Harry Markopoulos received Madoff's performance records and spent 4 hours studying them. He came back to his colleagues with a conclusion: impossible. You cannot generate these returns using this strategy. The math doesn't work. He submitted his findings to the SEC. The report was titled, "The World's Largest Hedge Fund is a Fraud." He detailed 29 red flags. The SEC reviewed the complaint and found nothing concerning. They moved on. Markopoulos tried again in 2001. Nothing. In 2005, he sent a 2-1-page submission. Nothing. In 2007, another complaint. Nothing. For 8 years he screamed and nobody listened. The SEC was not equipped to understand what it was looking at. The examiners who reviewed Madoff's operation were junior, undertrained, and starstruck. This was Bernie Madoff, the former NASDAQ chairman, a pillar of the industry. They did not push hard enough, and the victims kept coming. Jewish community foundations, charities. Nobel laureate Elie Wiesel's foundation lost $15.2 million. Hospitals, schools. Retirees who had put their entire savings in because a friend at the club said it was the safest place in the world. The brilliant irony is that Madoff almost never had to lie directly. He simply made his operation too exclusive and too mysterious to question. Clients who asked too many questions were returned their money and shown the door. The message was clear. You either trust me completely or you do not belong here. Most chose to trust him completely. December 2008. The financial crisis hits. Clients begin requesting withdrawals. Redemption requests total $7 billion. Madoff does not have $7 billion. He has never had it. The fraud is ending whether he wants it to or not. The 10th of December 2008. Madoff calls his 2 sons, Mark and Andrew, into his apartment. He tells them everything. The investment advisory business is a fraud. It has always been a fraud. There is no money. His sons do not help him cover it up. They call a lawyer. That night, the lawyer reports Madoff to the FBI. The 11th of December 2008. FBI agents arrive at Madoff's Park Avenue apartment. We're not here on a social call, they tell him. Madoff goes quietly. He pleads guilty on the 12th of March, 2009. 11 felony counts. No trial. No defense. Just, I did it. His explanation. I never thought I could stop. I thought I could get out of it eventually. I just couldn't. The 29th of June 2009. He is sentenced to 150 years in prison, the maximum possible. The gallery applauds. The losses. $65 billion in claimed portfolio value. $17 billion in actual cash that clients had deposited. Gone. Irving Picard, the bankruptcy trustee, has recovered approximately $14 billion over 15 years. Some of it clawed back from investors who withdrew more than they put in. Mark Madoff, Bernie's older son, could not live with the knowledge. On the 11th of December 2010, exactly 2 years after reporting his father, he took his own life. He was 46. Andrew Madoff died of cancer in 2014. Bernie Madoff died in prison on the 14th of April 2021. He was 82. The 17th floor sat empty. The statements that never reflected real trades were gone. The lie that lasted 40 years was over. And the people who believed it, they were still waiting to understand how they missed it.